Today we announced our 2025 full year financial results to the market. And together we delivered a really strong financial performance driven by our luxury-led growth strategy. Now up front, I just want to say thanks to our teams right across the globe. Your dedication, your passion are the driving force behind our results that have seen us boldly cultivate revenue, profit and margin growth. Achievements we can all feel immensely proud of. Turning to our financial summary. The performance of our luxury portfolio was the key highlight in fiscal 25, with revenue and earnings increasing across the group, driven by the continued growth for Penfolds and the full year contribution of TWE. Both revenue per case and earnings margins strengthened, reflecting the continued shift in our portfolio mix towards our luxury wine portfolio. Our luxury contribution to global revenue is also up on prior year, now representing 85% of our total group EBITS, reflecting the success of our luxury-led transformation over the past 5 years. And lastly, our profit increased 15.5% year on year. So I'll now take you through performance across our 3 commercial divisions plus our sustainability progress for F25. In a year that marked Penfolds' 180th anniversary, the performance was once again a highlight. We successfully re-established our Australian country of origin portfolio in China, reinforcing our position as the #1 luxury wine brand in that market. We acquired the Stone and Moon Winery in China's Ningxia province, which was a key milestone to support the future growth of our China-sourced portfolio and our commitment to this market. And in addition to China, we saw great, strong depletions growth in Asia, Australia, and across Europe, reflecting excellent momentum for the brand across a number of markets, and a proven track record of consistency and growth. Treasury Americas continues to lead the US luxury wine market. Revenue and earnings increased, driven by this portfolio, with a full year contribution from TWE and the ongoing growth ahead of the category from Frank Family Vineyards. A key highlight clearly was the successful completion of the TWE integration, the #1 luxury wine brand in the United States, with TWE Discovery the #1 luxury Cabernet. Matua also had another great year, strong year of growth, which partly offset the declines we continue to see with 19 Crimes. Treasury Premium Brands was impacted by continued softness in consumer demand across the lower price points and declines in the commercial portfolio, in particular in Europe and Australia. But the highlight was the continued momentum we've seen across a number of our key growth brands, which partly offset this decline. Squealing Pig saw revenue growth driven by great execution in Australia and distribution gains as it takes a foothold in the UK. Rawson's Retreat continued its growth trajectory after re-entering the Chinese market also. And innovation continued as an important driver of growth for TPB. New product development from Squealing Pig, Pepperjack, Cali Smooth contributed to revenue growth throughout this period. Now moving to our sustainability agenda, where we delivered just great progress across areas most material to our long-term performance, including decarbonisation, climate resilience, innovation, and our people, most importantly. We achieved 100% renewable electricity across our global operations by the end of 2024, reducing our emissions and our operating costs. We continue to invest in metering technology at our own vineyards, our wineries, and our packaging sites, particularly where they are high and medium risk catchments, supporting smarter, more sustainable resource use. We made ongoing progress again towards Destination Zero Harm as the centrepiece of our health, safety, and wellbeing agenda. And we just continue to embed inclusion, equity and diversity into our culture, with female representation a key focus. We also made further significant investment in our low and no alcohol wine innovation, including a world-first flavour retention process, positioning TWE at the forefront of product innovation. And finally, working with our growers and our bulk wine supply partners, we are adopting relevant sustainability certification around the globe. So we've got a lot to be proud of. Our progress is fantastic, but we also still know there's a lot to do. Today, we also reinforced to the market our transition to our new divisional operating model, which became effective on July 1st, which sees 2 outstanding luxury divisions, Penfolds and Treasury Americas, and the new Treasury Collective, reflecting the combination of TPB and the Treasury Americas premium brand portfolio. We also announced an on-market share buyback of up to $200 million, which will be completed progressively throughout fiscal year 26. This decision reflects our view The TWE shares are currently trading below their fair value, and it's a strong signal from our board and our executive management team in our belief in our luxury-led strategy, our financial strength, and our long-term growth ambitions. So turning now to fiscal 26, we expect to deliver another year of earnings growth. For Penfolds, we expect low to mid double-digit EBITS growth, driven by increased bin and icon portfolio availability from the fourth quarter, as well as continuing our positive momentum in the markets throughout Asia. In late July, we announced the appointment of Breakthrough Beverage Group as our new California distributor for both our luxury and premium portfolios, following the exit of RNDC from that market in California. We look forward to strengthening this existing strategic partnership with BBG, which already spans a number of key states and driving real growth once again in California. The Treasury Americas business is in a very strong position as the leading luxury wine supplier in the United States, led by TWE, which has strengthened its position to be the number one luxury wine brand in that market since acquisition. In fiscal 26, we expect to deliver modest EBITS growth for Treasury Americas, contingent on mitigating the impact of the reduced shipments through our exit negotiations with RNDC. And for the new Treasury Collective, our new global premium division, we expect top-line declines to stabilise throughout the year and continued growth to come from the priority brand portfolio, expected to partly mitigate the commercial brand portfolio declines. We certainly have increased confidence that under this new model, we can change the trajectory of this portfolio, with premium brands being a very important enabler of TWE's luxury-led growth strategy. So to summarise, F25 was a year we delivered growth against a backdrop of headwinds led by our luxury-led strategy and our resilient business model. We are well positioned for the future with a clear strategy focused on delivering growth. We enter F26 with great momentum, underpinned by the right operating model, key brands of scale like Penfolds and TWE, confidence in our luxury-led strategy anchored to the luxury wine segment, and most important of all, our people who deliver global excellence in execution every day. Today, TWE is a significantly stronger and more focused business than it was 5 years ago, and the clear global leader in luxury wine. We are well positioned to take advantage of the opportunities ahead with the quality and strength of our business and our team. Thanks for your time.